This is another episode of NRG Insights, in which we interview successful people across the mortgage market to discuss the kind of successes and pitfalls of how they got to where they are, and maybe give some advice to anywhere that they can. So today I'm introducing Joe Aston from Aria Finance. Thanks for joining me, Joe.
Yeah, no, thanks for having me on.
And so let's just start with, talk to me about your journey to how you've got into financial services to where you are now as commercial director of Aria.
Yeah, of course. It feels like it's one of those things that feels like a second and a lifetime, right? Which I think is what this industry does to people. It moves very, very fast, but I can't remember a time before it. I've been with the business about 7 years, and actually the business as I joined it was Vantage Finance, and I took a step back from a career that I was building elsewhere to get into financial services. So I joined as a BDM, a field-based BDM, and I sort of grew from there really. And actually I made the best decision possible. Well, I was guided to it by our managing director Lucy, who actually said, you should start doing deals. That's the best way of knowing this market, is get into the nitty gritty. So a few years ago, actually, I started involving myself, and all of a sudden, we've gone from there really in strength to strength. And I'm now the sales and commercial director at Aria Finance, as we are, after going through a merge last year, which I'll come on to, I guess. And look, what a time to be in it, right? Challenging, but there are wins. It's still a really good, strong industry if you're good at your job, and I think if you care. And I've sort of loved every second of it, really, even the bad bits, even the challenges.
Good. And let's touch on that, actually, because I think this is really poignant for people, because we're always talking about moving people into leadership roles and that kind of thing. I don't always think it's the best broker becomes the best leader, etc. But there's something to be said for rolling your sleeves up like you had done, and getting involved in other parts of the market. I think people that sat there waiting for a management role, probably waiting a long time. I think there's something to be said for doing the bits of that role that perhaps you probably didn't get into it with the vision of becoming a director. But talk to me about that, about the kind of what it takes.
On a personal level, I mean, there's two different things here. There's the school of thought in terms of leadership as a big picture, but then there's me talking about myself. Leadership's always been a thing that I enjoy. Actually, the man management side is something, I have a sports background. I think if you've worked in teams and you've tried to gear people up in that sort of setting, it generally transfers to your business life as well. I like seeing other people succeed, and I like being able to feel like I can influence their success as well and support them. And it was the natural evolution really, and through leading the sales team, it just sort of happened organically to then leading an advising team as well, and actually supporting.
Did you have that in mind when you stepped out? Were you like, did you have like a plan, or was it just, this is what I love doing, and it naturally kind of?
I probably had a relatively vague plan, right? It was probably a very non-specific. Actually, leadership in general, what does that lead to? And I'm a big believer in do the job well and get rewarded after. I'm not really I'm not a huge fan of the ask culture, and I think there are areas of business that are, that's quite entitled of, I want a title and I want to do this, and trust me, I'll be good at it later. I quite like step up first, get the role later, and actually show some grit. And also this business is, and this doesn't start with me, but I like to think I'm a part of it now, and I carry that on. The business has always been a real meritocracy. Do well, get rewarded. And I love that. That really suits me. I think it motivates me, and it motivates our staff as well. And I now bear that sort of mantle of, when I see people doing well, I want to make sure they feel it and they're acknowledged from our side too. So really it was generic ambitions of leadership which led to a more specific role, I'd say.
Good. I think that is really poignant in regards to do well, get paid, as opposed to people think, give me that pay rise and you watch me fly. Like, fly first and then you get rewarded. There's too many people like waiting for a promotion or waiting for a sales management job, or I deserve this because I do this. But actually, you've got to put yourself in those shoes already, haven't you? You've got to already do it. Because I mean, it's less of a risk for management as well. If you can see like this person already does it, they've already got their leadership skills, that kind of thing.
Yeah, I think so. I think it's a nice way around. And I guess the thing is, just looking at the other side of that, peeking over the fence, I get that a lot of people maybe have had their fingers burned with employers before, working hard, doing well, maybe not then rewarded, or not having a really clear, visible path to ambitious next steps, whatever that looks like for someone. But you go to the right place, the right employer, the right industry. I think opportunities are created. There's the saying, isn't there? If opportunity doesn't knock, you build
a door. Yeah, absolutely.
And actually, I think that's a good thing. And I think good talent in this industry gets noticed and rises naturally. I think
I don't think it always has to be in a leadership position either. I just think because you've got amazing brokers who are potentially not good leaders. I mean, we've got people who are incredibly good at their job, but because they love doing what they're doing. So I think you've also got to be wary, haven't you, of why you want to do it, I suppose. Because like you said, you love helping people, which is a management trait, as opposed to wanting to earn more money, which potentially quite a lot of people don't. If you're in a sales management, so you see how much sales people get, and you know what I mean. It's making sure you're doing it for the right reasons. Because bad managers are really obvious when they were just good brokers,
And management is hard as well, right? As well, that's worth noting, is that it becomes your core responsibilities are problem solving, and it can be, you can get trapped into reactive management, which actually then stunts your growth anyway. If you don't have one eye on what do you want to proactively implement and how do you want to get to the next steps as a business and drive good culture. So management it's nuanced. I don't think everyone is a natural manager. I think you can get better, and you get better through experience, but actually, just if you're not going into management, I don't think that makes people bad staff, right? Actually, some of the most important cogs in the engine are your best doers.
Yeah.
And the challenge to managers then is make them feel as valuable, because they are.
I was going to say that's the challenging bit. How do you, because with title obviously is made up, but at the same time, if someone's doing exceptionally well at their job and they're not going down the management route, how do you keep them kind of motivated to keep progressing? Because actually they're good at what they do. There's no need for them to go anywhere else. So how do you kind of cross that obstacle in regards to they're not going to be management, but they are exceptional at what they do?
Well, when I sort of interview people, and everybody at every interview you ever do says, I'm ambitious, I want the next steps, I want career progression, which is great, but quite often it's quite a vague ask. And I always think the road forks off. It's not a linear path. Actually, there are different, there are T-junctions, you go right or left. And I just think letting people know that both carry equal value in different ways. And what you might not be is, you might not be a man manager, you might be an amazing accounts manager to then look after some of your big clients, or actually take ownership over a pool of a product lender relationship, something that's not actually dealing with the problems of man management, but adds real value. And as long as, at the crux of it, as long as we as a business are creating roles or positions or giving responsibility out that makes people feel that they're adding more value, I think they're more likely to stay and to thrive and to go home feeling successful, when they've achieved something. So I think it's just constant. I mean, and there's the easy answers as well, which are some remuneration and additional targets and bits like that. But I just think making people feel like they're adding value to the success of the business is key.
I mean, remuneration is great, but it's not the sole. If you look at any of the research done in regards to drivers of why people would stay where they are, it's so far down the list. Like you say, feeling like you're adding value is so important. So it's interesting what you said then about taking on different roles that aren't management, because I think people do need to think about that in regards to if they're not going to be a manager, because there's only one for everyone. There's only a spot for so many people. Then how are you going to? And you also said very rightly, it's constant. You're constantly having to think of ways to keep people happy, because once it becomes a new norm, then there's another level that people need to kind of get to if they are stepping up. So it's a constant interest. And again, that boils down to the management side of things. If you're not interested in it, it's really hard. Yeah,
and also the thing is well, it's really easy to be a manager in a good market. Actually, the bounce back post-COVID was quite an enjoyable time to grow. And actually then COVID itself, the pandemic, you get recessions and, what we're in now, the last 12 months or longer, really, a little bit. Actually, that's been a really tough time. So it comes with good and bad, but it all depends on what someone's motivations are and, their long-term ambition.
Let's talk about that, actually. Let's talk about that, Joe. Let's talk about the last few months have been, the last over a year has been extremely tough. There's no one I'm interviewing at the moment that says, we've done exceptionally well and we're head and shoulders above we were in 2019. It's not going to happen, but at the same time, you've got a team to motivate, you've got a company to run, you've got shareholders to keep happy. I mean, how do you motivate the team when potentially we're not earning as much because the volume isn't there, and we're all commission based. So how do you keep the team motivated and engaged?
I think there's a few things. I think we try and be really transparent and have a lot of open conversation. A lot of team members in a business like this are coming in and doing the job and maybe aren't quite as connected to the outer market as maybe some of our sales team are, or some of our managers, or myself or our MD. So actually it's keeping people up to date with what's going on outside of our four walls, so that everybody understands that firstly the grass is never greener. right? Everybody has the same challenges in this market, and a lot of those challenges aren't anybody's fault. So all we can also do is, I'm really proud of our business. We're known for having, we have a premium reputation. It's our service that is a key selling point for us. And a bad market doesn't mean we can suddenly deliver a bad service. So focus on the controllables. What are the variables that are within our grasp? Keep getting back to people quickly. Keep working honestly. Keep sort of really striving to convert the business that's there and support the clients that need it. And I think people will remember that. We said quite a lot during the pandemic. We said quite a lot that the hard work you put in now for the deals that aren't going to go anywhere, people will remember you for when they have deals that will. And I think it's the same sort of thing. I think borrower behaviour has changed now compared to then. I think there's less loyalty. The market's harder in different ways. But I think staying true to yourself, this market will inevitably lose some people from industry. And I think a lot of those people are not to be too harsh, but I think they're probably people that weren't doing it right. And I don't think trimming the fat is a bad thing. And I think if you just stick to your principles and stay honest and true, I think you'll survive and the market will come back. It's cyclical.
I 100% agree. I think there's nothing wrong. I did post about this the other week about there's nothing wrong with getting rid of the deadwood. It's hard for us all. We're earning less and the business is hard and clients are on us and that kind of thing. But actually, when we come out the other side, if you've done the right thing, then you'll reap the rewards of having a smaller amount of people in a market that's a good market again. I think when it's been so easy for so long, it does pick up those people who just do it badly. And as you said then, the relationship management side of things, if you keep helping everyone you possibly can. I think I spoke to someone recently on the recruitment side of things where they said, you're the only person that comes and sees us at the moment because we're not spending any money. And that blows my mind because I think, well, that's such short-term thinking. You will, in 18 months, you'll be spending money with someone and it's not going to be the one who just ignored you for the last 2 years. I think it's, but again, because it's a relatively low bar to get into the industry, much the same as, financial services is very similar. If people aren't catching that quick money, they tend to lose interest. But I'm happy to see them go. I don't think it's the end of the world.
Yeah, I think that taking a long-term view is the key as well, right? So we have people who, we're for the most part we're a B2B business. We are a master broker. It's introduced through other brokers around the country who we value so highly and we want to help and support. Actually, there are people who have done hundreds of deals with us over the last 10 years who are now doing less because they're not as busy. That changes nothing about the value in that relationship to me. They understand us as a business. We're there to support them as and when they need. And I think if you take your eye off the ball there, then you'll lose out because everyone else is hungrier.
Someone's nipping at your heels, aren't they? Someone's nipping at your heels. Someone's nipping at your clients. There's someone out there that's hungry. So I think, like you said, if you just stop, you're dead in the water. There's nothing.
Yeah, for sure.
Let's talk about that actually, just in regards to your business. Obviously, you went through a merger at a really interesting time, or obviously you don't know, no one knows the market how it's going to go. But how was that? How was the merger? How did it kind of affect you?
Yeah, I mean,
not just business-wise, as in kind of employees as well. How was it? How did it go?
Yeah, I mean, so the context there is that we had two very similar sized master brokers already, both owned by the same group. So it's a conversation we've been having for a few years. Do we continue to run competing brokerages? Who were very competitive, by the way. It was, lots of Chinese walls. Or do we bring them together under one roof? And we thought the time was right. We obviously didn't know what was going to happen last September 23rd or whatever it was. But we spent a long time working on the branding to bring everyone together. It was a move born of ambition rather than consolidation, which I think a lot of mergers are. So that's a good thing because immediately from the staffing point of view, it was really easy for us to say with integrity and honesty, this is a move that should benefit all of you. This isn't about cutting costs, cutting jobs. This is how can we grow as one collective, I
mean, any change though, especially on an employer side of it, we see it all the time, an employee side of things. Any change that some people aren't comfortable with it, I think it is just a not liking change. I think as animals, they feel like something's up. Like, it gets people shackles up even though it isn't. It's a positive thing. So how do you deal with those?
I think you're right. We were lucky. The first thing is we didn't lose anyone, not within the merge, not as part of the merging process. People lose your staff, you get attrition over the year. Yeah. But in terms of coming together as a merge, we'd lost no one, which we saw as a real win, a real success.
Definitely. That's obviously giving that on a management point of view. That is making sure that they understand the story. And
that's the main thing. I think. Again, we were honest. No one was in the dark for too long. Once we knew we were doing it, we brought the team in. We showed them the branding months before it came out. We gave them the name. We talked about how this might look. We talked about why we think it's a good idea. Where do we think the wins come from? And actually, then when the market's turned, what we have now is strength in numbers and a really diversified proposition that I think people really appreciate. The management team came together early and did a lot of work on what's the new business going to look like.
So were they already connected, the management team? Were you already kind of connected with them, given that you were all under the same? Was it not? Was it all like fresh partnerships, fresh? No,
it was competitive. It was competitive before. They were a competitor. It's slightly different. The two sides of I always describe it as two sides of the same coin. Yeah. So similar product offerings, but different areas of success and expertise. Yeah. So bringing it together sort of brought all key divisions up to it was a leveler really, in a good way. It's brought everybody up a gear, and it's meant our influence with lenders is bigger, our reach is bigger, our gravitas in the market is deeper than it was.
So it felt that, even though the market's smaller, have you still felt the benefits of
I think so. Yeah. I think so. Again,
it's engage, isn't it? We come out of something completely different. So I suppose you can't, until we're all back up to the same level, you can't really gauge it properly until just more of a feeling than a...
Yeah, it's true. We haven't had a sort of a clean start to find out what our net zero is. Yeah. Right. And actually, last year the two businesses independently, and then when they came together, did really, really fantastically well. Actually, what we are now is still we're supporting more brokers than we have done previously, so our distribution is wider, which is great. Yeah. Business volumes aren't as busy, but actually there's some real success, and we're massively profitable still. So I think in this market, that's something you take as a major win, and credit entirely to the advisors who understand. They seem to really, at a really deep level, understand that they just have to work hard on every deal, value every transaction we see, try and help every borrower where circumstances are changing, mostly for the worse as well, right? Everyone's landlord.
No one's getting a better deal than they did last year.
No, their mortgages are more expensive, their other bills are more expensive, even the ambitious landlords, investors, developers are having to find niches that maybe they haven't touched before, or they're having to be more aggressive. And I think we just have to keep doing what we do and be there. And I think the mistake I think is being made, I'm digressing now, the mistake in the market is where desperation comes in from a widespread field. I think bad behaviours come in, and that can be bad service, it can be headline rate grabbing, which I hate. Yeah. But it also can be like cannibalising ourselves and our fees to make sure that someone wins. I think there are a lot of brokers out there devaluing themselves, trying to win a deal in front of them.
Yeah, it's the race to the bottom. No one wins, right?
It's crazy, yeah. And I think, this market is getting more and more educated in terms of, I'm talking the professionals amongst it, the brokers. People are educating themselves. They're getting better. I think the space is getting more professional, and that's a good thing. And with that comes some fantastic service. And I think when the rates all when the mini budget happened and the volatility really hit home, the one benefit of the mainstream media really jumping on the mortgage crises, as they framed it, was everybody was saying, go speak to a broker. Actually, this is really difficult as a consumer. Go and speak to someone who knows what they're doing. And I think, that doesn't mean everyone has to now drop pants and do it for free. If you're good at your job, I think everyone should back each other and push.
Also, you're having to give more advice now. I don't understand why we're charging fees in a buoyant market and then it gets tough, so you drop them. Like, this is the time when you're earning your money. You probably could have gone to your bank a few years ago when everyone was charging more money. So I don't get it. I mean, I know I lose business through people not seeing the value in the cost, and I think that's down to us as well. I think if someone can't see our value, that's probably my fault more than theirs, because I haven't explained it enough. But at the same time, if you do it now, when the market's better, no one's going to pay you more. Do you know what I mean? You're stuck where you are. If you devalue yourself now, you're devalued. It's really hard to pull yourself out of that.
Yeah, I think so. I think that's one of the big challenges, really. I think that, but again, it's the short-termism. And actually what we want to try and create, and our proposition as a master broker, and we're not alone in this, there's some really good packages, master brokers out there, but that model is all about diversifying people's income. And it's such an easy message to talk about to brokers across the country who have had their income slashed by the rise of product transfers, or their back book aren't doing as much because the rates are going high, and that's totally normal and something that everybody is facing. But businesses like ours can diversify their income, and the last thing you want to do is then cap that for everybody, because everyone starts to devalue the service itself. Yeah.
Do you think that actually, just on a point you made earlier about your distribution sort of bandwidth going up, if you like, you're speaking to more brokers, do you think that's wise because they're having to start doing I don't want to be disparaging, having to do a better job for their clients now because they're like, look, this isn't going to work now. Maybe not a better job, but they have to look at more alternatives because you're not just banging out your resi mortgages all day long.
Yeah, I think there's a couple of things on that. There's the first is the consumer duty element. Actually, if you're going to offer, Article 12, if you're going to offer great customer outcomes, that includes looking at options beyond maybe your immediate product offering.
Yeah.
And if you want to expand that product offering, you have, a couple of choices. You either upskill yourself, which takes you away from what you're doing. You add resource, which adds risky outgoings to your cost base. Or you partner with a firm that knows what they're doing, like ours or others. This isn't an Aria sell, but the model I'm a huge advocate for, because actually it's a way of taking cases that you're not doing already, passing them to a business that can, and then earning a referral fee on the back of it. And actually, what a great way of servicing your existing client bank and doing no extra work.
Yeah.
So I think people
they're getting good, like you said, they're getting a good service on something you're not really knowledgeable about. It doesn't.
Yeah, I think people are waking up to that for sure. What you find is brokers who are maybe new to the specialist world, who are dipping their toe in the market, what they might find is they'll pick something out the bin. I've said no to this, but maybe you can have a look. And I think what you find is conversion gets a little bit lower with new brokers to the specialist market. That's fine. I also think borrower behaviour more than broker, but it's not quite as loyal. So what we found last year, as rates were going up more gradually, when it wasn't quite as volatile, but we were in an interest rate rise environment anyway.
Yeah.
As rates were moving forwards, borrowers were being quoted this 4.5%. They were saying, "Oh, that's a bit much. I'm going to just have another look and I'll come back to you." And they realised from speaking to 3 others that is the rate. They come back and you go, "You've missed it. It's 5%," and it just kept going up. And I think
that's funny that people come back to mortgage brokers. I know they say it all the time when they go, "Is that the best you can do?" Like you were only going to give them the second best option. Oh, I'm just shopping around for rates. Like that's not a thing.
Yeah, I mean, there's a part of me that gets it just because if you're not in the world, you want to be sure, right? And I get it, but I do think good brokers. Borrowers should stick with good brokers. You want a relationship or 1, 2 max in the specialist world. You want to trust who you're working with and trust that they're going to do what's right for you. But I think that borrower disloyalty, which sounds maybe a little bit more negative than I mean it to, that's been a challenge for people, because I think a lot of brokers have had eyes on the same deals and they've all factored it into their plans and their outgoings and their pipelines, and somebody gets it and everyone else suffers for it. So I think there's a lot of...
that race to the bottom again. If like 8 brokers have got it, who are you going with? Because no one's got a magic product. But at the same time, you must see it all the time because you see deals on deals that aren't, from lots of different brokers. You must see the same ones, and you have to go, look, this is the 8th one. And I think it happens more in commercial than resi, to be fair.
Yeah, I think so too. I'd agree with that. I think residential borrowers like to work with a residential broker, maybe locally, someone that they've met, looked in the eyes, and sat down with. I think that's a good thing as well. By the way, that's the backbone of the mortgage broking industry: is trusted local advisors with a trusted local customer base. So I think that's fantastic, and I agree with you. I don't think those people are branching out, but the investor space is more about yield and margin, and therefore, they may be putting a little bit more importance on that rate race.
And I suppose playing devil's advocate with those as well. There's 240 bridging lenders, say for instance. No one's using every one, right? So if you are in the property development, it's a fine line, isn't it? Because you do dilute the deal. If someone's seen it 3 or 4 times, they're not interested in it. Same as you wouldn't do in any deal. I don't want to work on something 20 people work on.
Yeah,
but
honestly,
there are other things. I don't believe everyone is working. It's not regulated, so it's not like this is the best deal for you without a doubt. Using this software to show that you can't do it, So I suppose developers have got slightly more of an excuse, but at the same time, they need to be educated on diluting their deals as well.
For sure. You've touched on a topic there that actually I'm really passionate about, and I think the bridging space is a brilliant one. There are loads of really good lenders in that market, but it's also the most unregulated lending space, and it's also really easy. You meet someone from a family office abroad on holiday, and tomorrow you have a funding line and you can be a bridging lender. And actually that's really dangerous, right?
Yeah, really dangerous, yeah. And there's some great bridges out there that have gone through that, like brokers who own brokerages and then own bridging companies who kind of get it. But you're right, there's some interest. Well, obviously that they've been affected massively with those type ones over the last few months because they've sort of been found out.
And I think the key is as well, if you're going to try this space, if you're going to get into a fantastic product like bridging, which is quick and flexible and helps people to achieve whatever they're trying to achieve, whether it's a development or upscaling or securing their dream home where their sales fallen through, it's a brilliant product. But what I think you want to know is not just who can give me the money quickest, because all of them can. That's the answer. All of them
speed.
can.
Everyone's USP is speed. If everyone's USP.
And so much of the market are really good for that. What you want to know is actually who's funded well, who has good funding behind them, and who treats borrowers well if something goes wrong. Because every bridge that you put out as a responsible broker, you think you have eyes on a rock solid exit, because if you're a good broker, you vet it.
Yeah.
And a good bridging lender will push you to have vetted it and to have checked in. But actually, things can happen, certainly with rising build costs or delays or weather as we get into winter and things like that.
Yeah.
Or a sale falls through and you need a bit more time. Knowing how a lender is going to treat a good borrower for a valid reason for something not delivering is really important. And you only get that with the brokers who are really into bridging. So I think the best way to protect your clients is to engage with experts. But it's very easy for a product like bridging to turn into a race for quickest, cheapest delivery. I'm only thinking about the now, getting cash in my bank, not the during or after.
Yeah, fees and yeah, like you say, how they treat them and that kind of thing is a massive, lots to take into consideration. Do you think, I hear of it a lot, because obviously we deal with commercial and resi brokers, and we do get it where people go, I'm moving into the commercial space, and they don't, because someone's got a deal for them and that kind of thing. But it's a dangerous game to play, because I know why they do it. Like the prop fees are bigger, the deals are bigger, they're working with commercially astute people, not someone's resi mortgage, and so it's a sexier product than it is selling someone's remortgage. But 2% is nothing, still nothing. If you can't sell the product or you don't get it, it's a hell of a lot to learn, isn't it, in a short space of time? Yeah,
it is. And the mistake the risk you run anyway as a broker is getting it wrong in the first case, you lose the client. Mm-hmm. So bodging a transaction actually loses a longer term relationship, which can include remortgages or further purchases, and actually that's where the value lies.
And their 10 friends have told them.
Yeah, that's the thing, right? And the other thing is that the commercial lending space is generally there's capped agency. You can't just go up to a commercial lender and say, I've got a deal and here's the loan. Yeah. So actually, if you want to have the best offering, you need to then either build yourself up or go to somebody that has access. I would say that. I'm conscious that
and it's the same as you would. Of course, you want someone to package a deal. Like you do that for a living. But it's the most important thing about a deal is that a lender can look at it, understand it, want to work with you. There's all those aspects that you might not get as a one-man band who's trying to do their mate's development finance or whatever it may be.
But over the years as well, actually, we've worked with people who have outgrown us, and that's a really good thing. Actually, they've come to us because they were a resi broker and they needed help with everything, and we'd do it. And then they'd start staying more involved in the deals and listening and learning, and that's also fine. And then they'd get their own agencies and they'd start to do deals, and I think that's also great. That's just the evolution of a broker in front of us. And what happens now is we get less business from those people, but when we do, it's great quality, or it's larger, or it's more complex, and we really trust each other because actually that we went on that journey together and we helped them get to a point where they can do it themselves to an extent. I think.
Sorry, go on, Karen. Sorry.
No. I think again, as brokers, vocalise. Actually, my ambition is to do this long term myself, but I need help. And a good master broker, a good packager, is here to help everybody grow. We all benefit.
They get involved in the deals, so they do get it. Like you don't have to. It's not cloak and dagger. So they understand it. They understand what you're doing in the background. So they're always kind of growing as well. Because otherwise, they're just a lead gen, aren't they? There's no.
And I always say to people, you can use us like a referral dumping ground, happily. Right, fine by me. I don't think either of us come off brilliantly from that. I think it's a better look for us.
Postcode.
Name and a number, right? And we'll do it. We'll take that, by the way, for anyone listening. But I think it's a better look for all of us actually if we're working partners. Mm-hmm. And yes, we're the experts and we'll take the lead. But you can be copied in. You can keep updated. You can be visible, and ultimately that client is yours to then take on and carry on with the resi stuff and help them grow and come back to us with the next one. So I think that, again, I guess the theme of all of this conversation has been long-term view.
Yep.
Long-term planning over short-term quick wins for sacrificing some of that. I think that's the key.
That might actually be the title of this podcast. I'm just writing stuff down. No, but it does make sense in what you're saying. There is everything you look at long-term is going to be advantageous to you obviously in the long run. But it's a quick money. But then we'll talk about this actually, because obviously you have to hire, you do your kind of recruitment, that kind of thing. And if you're seeing the same as everyone else, but I won't put words in your mouth. People are changing at the moment as to what they want and how quickly they want it and that kind of thing. Have you noticed a trend since being in that kind of level of hiring that that people are changing, or people want different things, or what do brokers want? Are you finding?
In terms of staff?
Yeah, in terms of your staff, yeah, because I think the quick win thing's easy for us to say when you've been in it a long time, but we are in a generation now of short-term gratification, quick, got to get it done. So it's hard to maybe educate the next guys, but you're doing it, so it'd be interesting to get your take on how you educate those.
Yeah, I think again we try and get ahead of problems, right? Because it's really easy. I think there's probably an epidemic of pay rise requests across the country, and it's really easy as well as an employee working really hard. By the way, I'm talking about good examples of hard workers thinking I need a bit more money. Everything's costing me more, cost of living, and all of that sort of stuff. Inflation linked pay rises, and some firms will do it, some firms won't. And I think the challenge is making sure people are aware of what might that have as a wider implication on the business. If everyone wants 10%, actually, does someone have to leave to accommodate everyone else? Yeah. And then are you all comfortable with that? Is everyone okay with that sort of balance? And I think as long as people understand the ramifications of, okay, can we pay some more money? Yes. What does that mean? It means you have to do more business, because that increased pay is an investment for our stakeholders, and actually how do we grow beyond that? So I think we try and just get ahead of those issues by being really open about, here's what we wanted to do this year, here's what we're doing, here's what we're on track to do for the next few months, here's the wins, here's the losses, what do you think about that? And actually if people are still going, yeah, I'm really, really comfortable with what I've achieved there, I think I need rewarding, and assuming we haven't done it already proactively, that's a conversation to be had. But I think it maybe puts off if there are any chances. I mean, I'm talking hypothetically, actually I'm incredibly lucky. Our staff are really calm and switched on.
That must be down to the transparency that you are conveying across the whole business, no? Because if you're transparent about everything, and then someone's coming with unrealistic version of what they want, then it's easy for you to explain, isn't it? But if you're in a business where people aren't as transparent and aren't really explaining exactly what's happening, or maybe not making people aware that it's not a you problem, it's an everyone problem, then you're always going to come up against those issues.
Yeah, it does help. And I also think we try and avoid ever slamming the door shut to something, because as soon as you do that to someone, as soon as they lose faith that there's ever progression on the cards, then why would they stay? Why would anyone stay with you if they think
the feeling valued thing, isn't it? I think even if they're in the wrong per se at that time, they still feel undervalued. So it's irrelevant what you think. They're undervalued now in their, in their very core. So like you say, even if they're great and they're being paid well, it sows that seed, doesn't it? It's
tough. Yeah, I try and, if someone is decent or has potential or is looking for something and is vocalising it, which is a great thing. We love people coming to us anyway to talk about what they want. But it's a case of actually then mapping out, okay, well, here's something that if you achieved this, that would absolutely warrant that, because you will have really stepped up.
Yep.
And then the ball goes back into their court to make it happen. And then the key is, as an employer, we have to be accountable to what we said we'll do. So someone hits something you've said, you can't change your mind because the market.
Hit a little bit more.
No, none of that. That'd be awful. Actually, it's really well done. Big song and dance, because success is success in any market, and reward them for it. So we value hard work and attitude as much as the result side of things, because I think one leads to the other.
That makes sense. And in your future leaders, if you can kind of put some traits on, what are you looking for? What gets these guys kind of head and shoulders above other people when it comes to looking for future leaders or future seniors or the people that you spot that are going to be successful? What is it? What are those traits?
I think probably it's the difference between job people and career people is one thing I always look for. So somebody that's there 9 to 5 and is thinking about how much can I do, achieve and then make. That's fantastic. We need those cogs, but I'm not sure those are leaders.
Yep.
Someone who's asking the question of, how are we on track for this as a business this month? How are we looking versus budget? How is the other team doing? Just a base, someone who's instinctively leaning towards how is the team doing. I think that's the perfect grounding, and you can build on that. And then you can instill actually that anyone that's success, other people's success. Those type of attributes I think are really good within leadership, because the nuances can be taught and developed, and you can mentor people and hold their hand through that. But that base level just giving a damn about what the bigger picture is. You either have that or you don't, I think.
You're right. I think you're right. Leadership can be taught. You can get better at it, but you've got to have that baseline giving a shit. Like you've got to have it. You know, there's no. To be a good leader, you have to care. And
I think so. Yeah.
Again, not even knocking the other guys, because I work with loads of people like that. They just love coming in and they love doing the best. They still care. They care phenomenally for their customers, but they don't want to do anything else on top of that. They're not. You know, that's just not the way you're geared. So there's no point in trying to engineer someone down the wrong route, because, like top billers, again, I know I keep coming on about top billers don't make top leaders. It's just that you've got to find, like the Tracy you've just discussed is really interesting.
Yeah, I think so. I think big picture, right? That's the key, just big picture.
Do you think you see it early on in people? You're pretty good at spotting talent?
Yeah, I think with some people it's obvious and some people it's not. It develops and it grows. Some people need time to bed into the company as well and start to feel real ownership. You know, it's quite hard. I've always been a romantic at work in terms of falling into the previous roles for 5 years plus. Actually, that's the sort of thing you want to. I want to believe in what I'm doing, and I think you do see that in people, but some people need to grow into it, and I don't think that's a problem either. No. Some billers decide they want more, and actually when you tell them, well, this is what we're looking for, they can grow into it, but it's better if someone has that innately.
I suppose early on in people's career, they maybe don't know that they want that, because actually the one thing you think about is money, and then once you've got it, then that's a really good sign of going, right, what do I actually want next? You know, and actually that caring side should have already sort of come out in them.
Yeah.
So any sort of new brokers out there at the moment? Again, I don't think it's a bad time to be a new broker. I know people are moaning about the market and stuff. It's tough if you've had lazy habits for the last few years and you haven't done what you should do. But what kind of advice could you give to new brokers at the moment who are maybe just finding their feet and maybe find it a bit tough, but need that kind of words of wisdom? Someone's been doing it a while.
I think that, well, there's probably three things. The first is stick with it, right? Because actually, it can only go. This has been a hard year, so it will get better. So it will get better. And actually, so if you can start up in this 12 months and go on, you're going to have a pretty good grounding. I think the big thing for me in the entire broker community, in my mind, is communication. So just if you say you're going to do something for a borrower, do it. Hold yourself accountable to that communication, be quick on everything. And my other advice, which is, with our proposition in mind anyway, is actually take everything you see.
Yeah.
You might not be able to first-hand support a customer by taking their deal with your own two hands from A to B, but you can find the answer. You are connected to an industry where they're there. And it's not just the stuff we do, it's your later life stuff. There's equity release for your older borrowers, there's your unsecured business debt, all of that sort of stuff.
Protection that people left on the table for the last 10 years.
Yeah, and actually valuing the relationship with the borrower, not just the transaction, is probably the more succinct way of saying that is take the relationship, you'll find a way of doing the transaction, and utilise expert help, because those people will turn into your borrowers anyway with what you're doing longer term. So treat